Hello, everyone, and welcome. It is March 24th, 2026, Tuesday, Trading Trends with John Salama, CMT. Apologies, a little bit under the weather, so no show yesterday. I'll be doing another one on either Thursday or Friday to wrap up the week, and also next week I will be out returning the week after. So I should be back the week of April 6th. Let's get into it. Are we having fun yet? The market is not in a good place. You know, I'm a big, as most people should be, a big 200-day moving average person, and the S&P has been under it for a couple of days. We'll take a look at exactly the tape. I didn't think yesterday was great. I know it was a nice-ish up day. The strongest, rallies typically occur in bear markets, and I wasn't really happy with. We didn't hold VWAP yesterday on the day, and then we still closed under the 200-day moving average. We'll take a look at the intraday tape today and large, but right here, software getting pummeled today, and India both down about 3%. We'll look at the charts. Claude had a big update last night that basically can do what seems like most of white-collar work, especially for new-ish grads. It can update spreadsheets. It could do stuff from your phone, then push it. It really, they just did it simply on a Monday night. And IGV getting pummeled today. Seeing some CDS rate rise on some of the companies, seeing some really like 5-year lows on some, companies like Atlassian, Jira. There's others as well. And India had a nice bump yesterday with United Arab Emirates and down today. On energy, XLE, new all-time highs in terms of total portfolio, no longs. And the newest entry today was short TLT this morning. So that's my latest. I am short regional banks. I am short airlines. I am short... the newest one I said, bronze, a TLT. So not wonderful. Did I leave out a position? It's been pretty, airlines. Oh, and gold miners, obviously still in there. That's a profitable position. So, and the stops have not taken me out. That's what lets me know. Plus the confirmation of the S&P under 200 moving average. There's really not a great market to be had here. So if you think it stinks, yeah, you're right. Let us get into intraday tape. So let me stop sharing and then show the dashboard panel. Hopefully it doesn't give me any issues. Be careful out there. On the 200-day moving average is like, staying at midnight at a bar after midnight. Nothing good happened. It is ugly. It's very hollow underneath. You could easily fall. So this is the intraday tape for a second, but let me just see here. Micron down 3%. So, stock of the year, basically. I'm talking about, from last year into here. Microsoft down 2.5%. Ugly. Been trading for Microsoft. They're getting their butt kicked by Anthropic in that software war. Palantir down 4.5%. Google down an ugly 3%. Amazon down 1.25%. And Meta down nearly 2%. All right. So here's the intraday tape. I pay attention a little bit to the pre-market and after close activity, but I really, of course, really perk up once 9:30 comes in because that's where global liquidity actually enters the room. So that's what I care about. And that's that candle right here. Nice looking day. I wasn't truly a buyer. I actually shorted TLT very early on, right around here. Markets rallied a little bit. And just recently, I'm talking to you right here at 1:33 p.m. Eastern time, we fell under VWAP just about a half hour ago. Ugly looking candle right here. The level I'm looking at for the day is right around 653.80. It's very close to that. It's under 30 cents right about now. As I zoom out for SPY, look, so this is when we entered purgatory right here. The 18th was close. The 19th is really where the clock began, doomsday type stuff. I don't like to see more than 2 consecutive closes under the 280 moving average. It's putting some decent work, at least trying to protect that 640, but I am not forgiving too much of this, man. I'm not interested in buying a bottom feeding. My level for this, to be honest with you, is I think we head up to about the 610 to 620 area in SPY over the next, call it, 2-3 months, and then possibly a V-shaped recovery. I don't know what would spur that on. You would need the end of the war, and then, of course, probably a new Fed chair, maybe really signaling that rate cuts will happen in Q3, Q4. Market would sniff that out, and the small caps would go lower, leading that rally, but that's not where we are here. So as I said, I see probably we're 6% off the highs that we struck back here in January 28th. Seems very far away, not only 2 months ago, but more. And this, what was old support, is now resistance. This 661 is very important for SPY. That's the 200-day moving average. Algos look for it. Portfolio managers look for it. It's very important. And we are, as I said, $7-8 away from that, about 1.5%. So, you obviously want to see 650 hold here, of course. But no bets here. This looks super weak, and software is getting dragged. So let's get into the hood here in terms of I don't like these moving averages looking so heavy. And if folks really got bowled up on that rally yesterday, understand that SPY has not been above 50 RSI since February 26th. So this index has been absolutely in the doghouse. We haven't been closing above the 20-day moving average for a month. So this isn't we're gonna miss out. It's not V-shaped right here. Okay, don't worry. And when you do get the rally, of course, it's very headline driven. They paused the war yesterday for 5 days, and you saw what that did. Not much to the market. And here we are down 40 bips today. I think ensuing rallies, unfortunately, will probably get you just about that 670 mark. And then traders and investors will use that blanket there to sell until that liquidity. So unfortunate. We looked at for a long time this huge rectangular box between 700 and essentially 670, our old cement-like hold. Which way was it going to break? Something's got to give. I remember texting a trader about a week and a half ago. I said, we're at 3-month highs in vol. And the S&P is still, less than 2% away from all-time highs. Which way is it going to break? And I figured to the downside due to the weakening breadth we saw, just energy creeping higher and higher, and a big unwind of everything from staples, gold. Crypto is already done in terms of really selling out of it. But that's what you have to look for here in terms of levels. Obviously, it's not going to go to 615 in a straight line. You have to look at where previous battles were in terms of the tape. And I could see 635 being the next point. It was a bit of a level that we struggled with at the end of summer last year. Let us get in the hood here and see. As I said, man, I wish I could be going long some fun stuff. Unfortunately, the trade today was short TLT near the bell, opening bell. So not the direction I wanted. It's an interesting divergence too. I like having a full macro book. Obviously it's all short, but I do like the fact that I'm still now, they're selling bonds here with the higher for longer is really starting to become higher forever because the Fed can't cut, especially if oil stays up here. It's going to be too sticky and they'd hike inflation further. So they're in a really tough spot. And that's part of the reason why the market is so twitchy here. And I think it is losing a little bit of, Trump's control of the war, macro, etc. But let's go to XLE here, up 2 1/3% today. That candle right there denotes a new all-time high for energy. This thing has been the belle of the ball, overbought essentially since January 27th. That is about 5 weeks before the war started. VWAP that day was 49.5. Got you to a beautiful 61 print right here. This is fully targeted for me right here. Of course, this is headline driven. Of course, you saw oil tumble a little bit yesterday on any kind of de-escalation news. This probably has a decent fall to about 57.5. And I think that'll be your invitation, to buy. As I said, this has been just stupendous looking chart. This has been above 55 RSI since mid-January. So that's it. The market snuffed that out, that rotation into this a month and a half before the war started. Okay, so always follow the money. That's why we look at these standard sigma movers. And I believe, honestly, right here in late January, we said, yeah, energy is looking absolutely great, especially right here. Easy, I can confirm it. Breakout from a former area plus overbought off into the races January 26th. That was just a couple of weeks after the Venezuela invasion, if you recall. So that was that first area, and that got you an entry at around 50. So as I said, my full target right here is honestly right around 61 where we are. If it is all-time highs though, so blue skies ahead. Typically 81 RSI is just amazing. Super overbought, but they're buying first, asking questions later. If you wanted to chase this here, the ATR as is expanding is 127. Call it 250. You can get in here at $61. If it goes to 58.5, get out, save yourself that dollar. It's very likely going to 57 to 57.5. And that's the trade for that XLA. I'm technically synthetically long this, but I'm short jets. So rising oil makes this go up, of course, in advance as it drops jets. And jets has a little bit different of a payout in terms of or outlook versus consumer discretionary, employment picture, etc. So I like the levers that jets has to the downside. Next one, and I'm telling you, I didn't want to make this the energy show right here for the start, but XOP new 52-week highs for that, and this one has become overbought at the war. So that actually did start right around that weekend when the Iran strikes began. We entered this phase of above 70 RSI and has not looked back. XOP, a new 52-week high today. Let me see here. Um, about fully targeted to this too. I like about 183, so maybe a little bit more. They're really loving it today, up 4% nearly. 78 RSI, pretty much, just about as overbought as the overall energy complex. Any kind of de-escalation here would push this baby all the way back to 165-ish, right around 165, I believe. So it looks like a gross reduction here in deleveraging, which is possible. If you wanted to get into this one today, I gave you the level for XLE. If you want to get into XOP in terms of the catch-up trade, because this is 52-week high versus all-time highs, the all-time high on this going back to 2014, $336. A double basically from here. So it is possible. And folks love the catch-up trade. Again, let me just go to that long-term chart. We just got above this meaningful. So each bar here is 1 month. We just got above, finally, a flatlining moving average. And again, if it works fractally, it works on any time frame. If we get a break from a previous region with overbought, and we're right on the cusp of it, 69, this thing's going higher. And I don't see resistance in this till about 225 longer term. So if it does drop, I'm going to go back to a 1 year. If it does drop to that 165, wonderful. That's going to set up an invitation XOP. I don't think enough folks are in it, believe it or not. If you want to chase this right here, clean. The ATR is 506. Call it $10 because of 2x. So you get it right here at 182. If it gets to 172, get out because it's likely going to 165. That could be, further gains though. As I said, so that is a reason to get in if you want to, that construct. In terms of like just last thing on derivatives plays, I really like doing leverage with shares here. Hence why I give you the levers, the levels. Options, you could do the same thing technically, but it's a lot tougher. And of course, you got to right size the position. I truly just like shares better. But for these kinds of XLE, XOP, it's super expensive. My typical trade, what you would do, it's really difficult, but I would probably buy June upsides. So we'll just take this one because it's on the screen. I would do maybe like a, what's like a 5-10% out of the money, maybe check the liquidity, but like a $200 June call, and then I would sell, and this is the riskier part, it becomes even riskier, unfortunately. I would sell something like 3 weeks out against it. So I would sell the April's 200. So I would do that type of calendar spread against it. But there's a lot of risk in it. I personally just like shares, trade accordingly. And then here's another one, more hard assets. Okay, what are they buying today? Energy, XOP, and materials. Okay, this is it. They're not buying Meta. They're not buying, things like that. Look at this chart. So here's XLB materials. Peaked on February 12th. And then boom, we just got ugly oversold. Although it held the 200 moving average. I love that. Moving averages obviously curling lower in terms of the shorter term moving average. I'm looking at the 20-day. This finally looks like it's basing. I do like that hold. I like the rising 200 moving average. I'd rather buy into strength once it breaks above a 50 RSI, corresponding with about a 49.50 close. But I do like this one. As I said, this has to get above about $49 even. They're loving it today. Rising 200 moving average. I personally would probably rather buy it with a close above 50 even. And then my target for this is $53 to $54, which would be just inside the 52-week high here. It was 54.14. I believe, is that an all-time high? Yes. So that's what I would do there. If you want to chase it right here, although it's still, on its back a little bit, the ATR easy is 107, so call it $2. You can get in right here. If it drops to 46.40, I would get out because possibly it tests the 200-day moving average, which is still going up by about 2 cents a day. So material's not looking bad. This one's a little bit cheaper. If you want to be a little bit ballsy, you could just outright get June, 53 calls, 54 calls, and then sell the April 54s against it. So that's another trade suggestion for materials. This is what the market's giving you right now. You got to trade the market in front of you, not the one you want, the one you have, okay? Now, let's see what is getting pummeled today. What's really supporting this sell-off? IGV. I know several people were bottom feeding on this. I said it's not done. I'm a big believer in the V-shaped recovery in markets. I was live during, 08 took a while, but 2020, obviously that was a crazy period, but down, and then boom, typically like truly an actual V-shaped recovery. I don't think things reprice super quickly when you have massive, Anthropic updates and software. And I see a lot of meaningful companies in here not hitting just 52-week lows. I'm talking 3, 5, 10-year lows within IGV. So don't like this this basket just yet, though it technically bottomed here on February 24th at $76 and then a rally to 88. It is volatile, of course. We're boom, give back of 10% here, and it's at 81. Let's see. So this is, you got to see, does it hold this before this fallout here? It basically had 2 days under $79 even. Where does it go here? View up today is 81.93. They said no, thank you. This is at low of day right here, so they're not interested. And again, that's the best you can muster above a 50 RSI. So the buyers were in control for less than a week. I'm good. I don't want to own that. So in terms of trades here, I mean, it seems to me easy. If it gets to 89, you sell it. And I was not a buyer here. I think I actually still said IGV is going lower. For whatever reason, I did a lot of overlays. I see this bottoming around June, July timeframe. I don't see this done anytime soon. I think this has more time to go to the downside. I think the chart, especially the candle today, looks like this wants to go to about $77. So with the overall market weakness, I don't, with S&P under the 200-day moving average, and this is one of the weakest areas, I don't think they're going to pile into it. So I think it's going to get very close to a new 52-week low over the next couple of weeks. So this is super expensive, of course, in terms of puts. If you want to do the June, 75 puts, good luck. It's going to be really expensive. You'd have to sell, again, the April, 76s or something like that against it. But they're pummeling software today, down 4.2%. I think if this gets to 85, it starts to sniff 85, they're going to sell it again, use that liquidity to get the heck out. And here's another one, a whiplash type reversal. India was the biggest gainer, or one of the biggest gainers yesterday. Ugly candle. Tell me this technical analysis is, astrology. Look at this candle yesterday. Looked ridiculous, up to 48.21, but look at that. 47.73 was VWAP, and it closed beneath that by 10 cents. I don't like that type of momentum. And what happens the next day? Boom, down more than 2.5%, back to oversold. India has been oversold for 2.5 weeks. Significantly getting hurt is their consumer baskets, the retail and consumer discretionary there, plus small cap. So it's absolutely risk off in India. They have a lot of cheap labor used here in the States, immigration issues. It's just not in a good place, India, going forward. And the world thinks this as well. Also, the third largest importer of oil. So this price is absolutely killing them. Ugly chart, 52-week low for the nation, the country here of India. Let's see. View up on the day is 46.57. It's underneath that. Ugly. Nobody wants it. I can't believe people actually paid 48.20 yesterday. Life comes at you fast. In terms of trades here, I'd rather it's, in the hole here. I wish it gets to $49, but wish is not a strategy because then that would be an easy sell here. You got to zoom out here. Let me look at a longer term chart. All-time high back in September 2024. India started trading this ETF in 2012. And right here, the bottom was 2013 back at $19. We're a ways away here. In terms of levels, this could easily get back another 10% going to $42, 42.5. I'm just looking at this resistance level from before here, going back to fall of 2023. So there is more to fall. When you need more context, zoom out. Possibly this gets a dead cat bounce on some kind of de-escalation news to about 49, and they use it to sell. This thing has not caught a significant bid of any kind, honestly, since February 10th. That was a month and a half ago. So those were the losers today. So they're buying energy, anything energy complex, oil and gas exploration, production, materials, and they're really tanking software in India today. All right, let us see here the top 3 gainers of the past 5 days. And I told you here, volatility. Well, my level was the 200-day moving average. It was really important to me. And of course, it moves right here. That level is 35. I don't want to see it above that. It is right there today. It's a percent away. It's up 2% today. VXX is your biggest ETF, ETN gainer, up 8% over the past 5 days, 1% and change a day. Today, trumping that. No bueno. So if you own puts, you have been, overall, if you didn't top ticket, you bought the absolute high. You've been enjoying this past week, depending on what you're short, through put ownership. But yeah, this looks like it. What I'm saying for S&P, expecting to go lower, this inversely is expected to go higher. I think it goes above the 200-day moving average. You definitely don't want to see this 200-day moving average start to flatten and incline. That would be very bad. Right now, it's going down by about 9 cents a day. Still good. But the problem is, I do think we get to about 37.5 to 38. I think you get a bit of a cascade. Right now, it's been somewhat of a orderly sell-off in markets. I think it picks up as markets typically do. And the same thing, the same way SPY hasn't had a bid for a month and change, VXX has been above 50 RSI since the week before the war. So we're dealing with several things here. So as I said, I don't like trading VXX in terms of buying options on it. It's more so when you're charting a non-time series, I like to understand where we are in terms of the elevated volatility environment. And I do think this gets to about, like I said, 38, so about $3 or so, about another 8% or so of upside in volatility, which would be a bad spill over to the downside for markets. They're loving volatility, though, in the past 5 days, up 8%. Next, and we looked at this one, so I'm not going to go crazy, but XOP is the second best trade on the board, up 7%, almost up just as much as volatility. So just a percent and change today, a big one, up 4% to new 52-week highs for XOP. And again, don't want to be, turn into the rerun show here, but XLE, number 3, up 4.5% over the past 5 days, also trumping that trend today, up 2.4%. Let's look at the top 3 losers of the past 5 days because they are much bigger in absolute percent terms than the winners, of course. That's what happens when you have SPY down 2.5% over the past 5 days. Clear downtrend. The biggest loser, and I'm short GDX. GDXJ is the biggest loser, down 12.5% from these beautiful highs on March 2nd. Bearish divergence there as well that occurred. 65 RSI. It's not what you want to see. Boom. Typically, when you see that, it's almost like immediate. Within 48 hours, you're going to be under 50 RSI, and you may stay there. Just what I've seen from many times in charts. If you're at, I bet you got a bearish divergence or bullish divergence, it looks like you're going to visit the 50 RSI and also the 20-day moving average almost immediately, it seems like, within 2 days. GDXJ here, nice hold, rising 200-day moving average, 100. Did get oversold. Don't like to see that of a superstar, but it is a very volatile group. The floor there has been 103. Today's 108. They don't like it today, down 1.6%. I still do like the gold story. I am sure. Yes, you're saying, how can you be sure if you like the gold story? This is, I think, the top 5 year-over-year winner. I mean, look at this chart here. Last March, or last April 7th, this was the SPY 52-week low. This thing view up was $51. It got you more than a double here in 12 months. That's a winner in my book, and they haven't thought about selling this. It's not close to the 200 moving average. The closest it's been versus outside of this week was back when SPY went on the 52-week lows. So I still like that kind of protection in that kind of era. I think good and bad news on this. I do think this has I'm not going to call it dead cat bounce because I believe in the instrument. I think this moves to about 125 over the next 2 to 3 weeks. You need things to go right now. Okay, so you can't have gold down every day and markets in free fall. VIX climbs are not going to go to gold as a safe haven. This is, a delta play, and this is the junior gold miner. So this is operating leverage. If the costs go up for the gold miners, this group is not going to kill it. They're not going to crush it to the upside, right? So that being said, so that's what I'm saying. You need some kind of de-escalation, a little bit of a pause, good talks, But the charts tells me here from this strength, it has to put in higher lows, which it's been doing. That 100 looks like it's clean. I know it's crazy. I said 2 weeks ago you could sell 100 puts. I said it on GDX, and then 2 days later, gap down 6%. Here I like selling the 100 puts, but you have to buy like the 98 puts against it so you sleep at night. I do think the 100 sale is decent, but do understand this instrument also is sub 50 RSI since March 5th. So the war started. And then truly about 2 days later, that was the Monday. So 2 days later, they said, no, thank you. 140 is the new ceiling on this. And we're going to sell gold miners lower and have basically no bid. And I'm translating that as not having above a 50 RSI. So I do think this gets to about 125. I like the candles I've been seeing the last, 4 days. If you're absolutely insane, super ballsy, you can buy the June 125 calls, sell April against it, sell like the 115s, the 125s. You can keep it clean, same strike. That would be an options play. If you want to get in it right here, super volatile. The vol has expanded, the ATR or average true range. You can get in right here. It's pretty risky, of course, as you're picking something right off the mat here. This thing collapsed to 27 RSI the other day when it had a low print of 103. But it's a 7 ATR. So about $14. You're probably just better buying the stock. And then if it gets to 125, 127, establishing a bigger position. I would do starter positions right here because I don't like the collapse it had under 125. That's what I'm saying. The old support becomes new resistance. But I do like the story overall. I still think it'll be a leader towards the end of 2026. Why are we talking about it today? Because this is the biggest loser in the past week. Past 5 days, gold miners down, juniors down 12.5%, nearly 3% a day. Today, a little less than that. That's what you want to see. Candles get smaller and the trend getting a little bit tired. All right. And again, they've really been number 2 loser for the past 5 days is silver, down 12%. So basically, they've been liquidating the metals. Silver, last time it had really hard times was May of last year. It was pretty much range bound. Then overbought period. September, November, January. Of course, it peaked January 29th at essentially 110. And look at that, a 50% give back, almost trading like crypto, essentially, is silver. But of course, silver more spec than gold. Gold chart doesn't look quite like this. Silver, I like basically what I said for gold miners, juniors, is going to go for this. Silver, losing about 2% a day. Today, reversing that, it's up. View up on the day, 62.58. It's holding that. Looks decent. Good and bad news for this. I do think it has a decent 2 weeks. And I do think this heads towards about $71 to $72. That is a rich, $9 from here, more than 10%. So a big move. The vol's pumped up in here. You could buy, I believe the silver SLV options are priced very cheap, so be careful. But I would, you could do the June 72 calls, right size it appropriately. These could go to, very, very low, amount the next day. But I do like the sticking of the landing here at 60 even, which has been a level that it's been holding since Christmas Eve. So as long as that holds, I like the 200-day moving average rising at 52. This thing's still, accelerating. It's going to be about 50 cents a day, not quite the velocity it had here. If you want to be a lazier, more evidence of the weight of the evidence approach, wait for it to start get above 50 RSI. That's going to correspond with roughly $74. And then my target, though, however, is right around this $85. I don't think you're going to get more than that. But that's still a great, great trade. If you wanted to buy, it's a $4 ATR. So, if it goes down $8, you would get out because it's likely going to 52, but it's almost a wash. From 63 minus 8, you're going to 55. You can save yourself the $3 because then times will get likely harder. But be careful. The RSI that we had 2 days ago, 34 is, the lowest it's had all year. So, patience is kind of key here. And then the next one, the whipping boy, is back to being the whipping boy, Ethereum. I'm sorry, the third biggest loser this week. So understand, gold miners gains to give back, right? Year-over-year leader. Silver gains to give back, year-over-year leader. Ethereum, not year-over-year leader. Down and not year-over-year leader at all. It peaked August 22nd in the dog days of summer here at $37 nearly, and really just fell out of bed January 20th. No interest. Folks said no thanks. This was the little oopsie, almost reminiscent of the IGV bounce. Like, this is the best that Ethereum could do. Those that 11% day 8 days ago, and then that was pretty much it. And then he started giving it away. That is Ethereum. Still not loving the crypto complex. It was pretty, not really sensible move. When I saw, ETHA and Bitcoin at 1 month highs, I just wasn't a buyer here. This, to me, if it gives back significantly against 16.15 or the 21-day exponential moving average, which it is under today, it's down 2% today. It's down just about 2% for the past week. So same difference there, right? And under 50 RSI, essentially the trend it's had since it peaked above the 200-day moving average, January 16th. I think this is headed to about 14 even. So you could buy the 14 puts. These are going to be expensive, of course, but give yourself time. That's what I'm saying. June for all these. I do think you make money in that. I don't think they're going to go, in terms of an unknown duration in a war. They're going to go into Ethereum, which is a, future gen tech, hopefully used by Wall Street and tokenization in the next decade plus. I don't think they're going to rush to it right here. So I do like this to the downside. I would probably enter, a turtle short on a break below, unfortunately. So I'd be a little bit late to this on a 1 month breakdown. But I don't like this. That truly looks like that was the rally. This move, honestly, I'm not going to be, cute and pick point the low here. Right here from about 14, 15 all the way to 17. That's a monster rally. That's exactly the definition of a dead cat bounce with a fall internally moving average. That's what I'm getting concerned about. SPY. That's what we're saying. Oh, old support becomes resistance. You get to that point. Look at this last thing. Look at this, what it exactly did here. It got to the 50-day moving average 2 times, and they said, no, thanks, and they let it go. Moving averages matter. Horizontal lines matter. Technical analysis matters. This thing looks like it's going lower. I'm sorry, crypto land, to about $14. Okay. If you want to short it, the ATR is 80 cents. So you can do a reverse, right? So now we're shorting. So if it goes $1.60 against you, so for simplicity's sake, we'll say the stock is 16 even right here. It's 7 cents off. And 160. So if it gets to 16 plus 160, 1760, get out, because it maybe is going to make a move towards $20 to $24. I doubt it. More likely, though, you're waiting for that breakdown, and this would be beautiful confirmation, of course, once you see that under a 14 handle. But I don't like Ethereum here for the next week or so, especially if it's under 16.15. It's weak. No bueno. Top 3 trades of the past 5 days. If you were in these, you're absolutely killing it. Short GDXJ. I'm short GDX. Whoop, whoop. Short silver, very affiliated, of course, correlated. And then short Ethereum. Okay, this is where the gains have been. We will be back on either Thursday or Friday for the wrap-up show of the week, and we will speak to you then. Good luck out there. Peace.